David Morgan with you with Investment Pitch. 16th of February 2016. Well, let's look at some of the headlines that are out there in the mainstream and alternative media to get a flavor for what's going on in money and metals. One, the black hole of debt. Certainly the debt situation continues to increase since the 2008 financial crisis, and it has become a black hole. Investors are flocking to gold like there's no tomorrow. Gold was up 10 days in a row. It moved up significantly last week, and of course it's settled back down now, testing the critical $1,200 level, which looks like it will hold as far as I'm concerned. So I think we, again, as I said in the last update, I thought we would have a fairly strong gold market for the next couple of months, maybe into the summer. Time will tell. Credit default swaps are back as credit fears grow. The Chinese have missed their trade numbers. China is certainly suffering from problems. The emerging markets, really across the board, there's this idea of contraction, and things are not really going that well. Of course, you've got the ECB and other banks that have a solution, and that, of course, is to print more money. So the metals, again, are looking good. There was an interview last week with Monetary Metals, interviewed Keith Neumeyer of First Majestic. And at the beginning of the interview, he basically stated that coming from about a $15 silver price to state that it's going to be he believes that silver could be $100 an ounce sounds very extreme, but he did make that statement. And of course, I put it in writing in the early 2000s, I think about 2003 in my first book, Get the Skinny on Silver Investing, that I thought before the bull market's over, we would see $100 silver in U.S. terms. Certainly we are a long ways from that today, but the point I'm making in this update is that the markets are shifting. We're generally seeing a declining equity market and an increasing precious metals market. Obviously, they'll ebb and flow up and down, back and fill. But I think the major trends have changed. And just for everybody's benefit, there are those that do not believe this. There are others that are pretty well known in this domain that think that gold will trade under $1,000 this year. And you have some very, very well-known banking entities such as Goldman Sachs who suggested shorting gold and certainly do not see gold as having any viability. Of course, anyone that knows me even just on a cursory level would understand, I think, quite differently than that. So that's a wrap for this update for Investment Pitch, Money and Metals. David Morgan, I'll be back to you in the near future.